On April 24, reports from Russian news agencies indicated that Russian Finance Minister Anton Siluanov made a statement regarding the increasing use of national currencies by China and Russia in trade settlements. Siluanov noted that over 70% of trade settlements between the two countries are now conducted using their respective national currencies, the ruble and yuan. He believed that this shift was mutually beneficial and trustworthy, and predicted that the ruble and yuan would continue to replace the US dollar as a global currency. This trend towards de-dollarization has gained momentum in recent years, with more and more countries hoping to reduce their dependence on the US dollar. This movement is being driven by two major trends. Firstly, the US's behavior on the international stage is becoming increasingly unsettling, particularly with its economic coercion and extraterritorial jurisdiction. Secondly, many countries are realizing that, from an economic performance standpoint, the dollar is no longer a safe and reliable store of value, especially considering its out-of-control spending and mounting debt. China is leading the charge towards a multipolar currency world, spearheading global mobile payments and driving global monetary reform through initiatives such as the Belt and Road. In this new order, the dominance of hegemonic states and superpowers will no longer exist. Instead, currency will once again become a means of exchange and a store of value rather than a tool of economic strategy. Despite the US and the dollar continuing to play a significant role in world affairs in the coming years, the dominance of the US dollar is threatened by continuing to impose economic sanctions on countries like Russia. These sanctions could prompt targeted countries to seek alternative currencies, avoiding harm to their economies caused by the US dollar, potentially leading to the collapse of US dollar hegemony. US Treasury Secretary Janet Yellen recently warned of this danger. Russia has taken measures to stabilize its economy and reduce the US's ability to impose sanctions by clearing all US Treasury bonds and establishing the Russian ruble as the main trading currency with China, Iran, and other countries. However, the US has retaliated by freezing Russian overseas assets and transferring frozen Russian personal assets to Ukraine. This move has undermined the trust and support of the Russian people for their government. The US dollar's hegemony has come to a dead end due to the Biden administration's frequent rate hikes since the Ukraine crisis. Arbitrary sanctions based on self-interest are wrong decisions and will face strong opposition from more countries. The world's attention to the US dollar's fate has been growing in recent years, and the US dollar's current situation is entirely caused by the US government itself. Rate hikes can help the US attract global capital and alleviate inflation problems, but they can also trigger a US debt crisis and bank crisis. As the Silicon Valley Bank's bankruptcy has shown, the US government is well aware of the adverse effects of rate hikes, but it has no choice but to proceed because stopping the hikes would cause the US economy to rapidly collapse in the short term, given that the US debt has reached $31.7 trillion. The ongoing Ukraine crisis and the continuous decline of the US dollar's credibility make the decline of US dollar hegemony inevitable. Many countries around the world are accelerating their steps to decouple from the US dollar, and the Russia-Ukraine conflict is one of the reasons. The US has imposed illegal and unreasonable sanctions on Russia, causing enormous losses, but the sanctions have not achieved their intended purposes. Instead, they have forced Russia to find alternatives to the US dollar, thus accelerating the decline of US dollar hegemony. Over the past few decades, the US has not only imposed unilateral sanctions on countries such as Cuba, Belarus, Syria, and Zimbabwe, but has also increased its maximum pressure on countries such as North Korea, Iran, and Venezuela. The United States' financial hegemony has been met with resentment and resistance from other countries. The decline of the US dollar is also due to the spread of the US banking crisis, which has led to a continued decline in the status of the US dollar. Countries need to avoid risks by selling US bonds or using their own currencies for settlement systems to promote stable economic development at home. However, this process requires time and effort and cannot be achieved overnight. As more countries take action and put plans into practice, de-dollarization is no longer a distant dream. The future of the world may no longer be dominated by the US dollar, as countries may adopt multiple currencies for trade, such as the yuan and the euro. This will make the global economy more diverse, avoiding the risks of relying on a single currency and benefiting all countries' development. In conclusion, de-dollarization is an inevitable trend driven by the United States' hegemony on the international stage and the relative decline of the US dollar. Taking proactive measures to deal with de-dollarization is beneficial for other countries to protect their own interests and promote economic development. The US dollar may not lose its position in the global economy, but it may no longer dominate the global monetary system as it did before.
Thanks for watching. If you found this video helpful, please consider subscribing for more content. Take care.